Alrighty, welcome back. What is up, guys? Gonna do things a little bit differently today. I prepared some bull points and bear points. Coming forward, was thinking about this a lot and wanted to talk about all these points. If you guys enjoy the content, please leave a like, and if you're not subscribed, check out the subscription button down below, and also check out the link to MEXC down below. It's a new exchange I've been using lately. Here's one trade. I have a freebie right here for kind of what I've been doing. I shorted at a really good time. I was talking about that in a live stream earlier, kind of showed you guys right when I got into that trade. So streaming right when I got into that trade, so that was a good one so far. Really good promo I negotiated for you guys. A link in the description below if you're interested. So yeah, check that out. Really good exchange for experienced traders only. None of this is financial advice. And let's look at here. So there's a few things I want to talk about here. So it's technicals and a little bit of fundamentals too. So let's go through the bull points. These are pros for the bulls. So we get the market cipher, B monthly green dot, and that historically, just looking at this right here, that historically has always given us the bottom. Now, I'm going to talk about kind of the reason why this may be a little bit of a red herring, maybe a false thing for the bull case, but historically, obviously, the last one we had, in 2019 gave us the bottom. And then I believe there was, I just want to look real quick at the a chart with a little bit more data here, Bitcoin all-time history, this one on the monthly, and I believe, yeah, even back here, if you look at a chart with a lot of data, this was when we were already bottomed out, this marked a pretty good bottom. This, I think maybe on some exchanges you went down below. I think most exchanges you didn't make a lower low here, but that could be more of the case to have a capitulation sometime in mid to late this year, if it does play out that way, I guess. But I think on the Coinbase chart, or I forget what it was Coinbase. Coinbase was around back then. It definitely was around back then. But I don't believe you went. Let's see. Yeah, you didn't go that low there. So yeah, believe most exchanges the bottom was in January 2015. So yeah, that's the main bull case for that reason. That could be a good point for the bull case. And the 4-year cycle, repeating the 4-year cycle. If you look at, you can kind of just demonstrate it, on the same chart. 4-year cycle, big bull run, down, a lot of red candles, that was the bottom. Big bull run, a lot of red candles, that was the bottom. Big bull run here, a lot of red candles, that was the bottom. And I mean, a very quicker version of it there. Every cycle kind of extends a bit. Here took a bit longer there with the double top. And it seems like the bull areas typically get a little bit shorter. So if this was the bottom here, this would be bear market shortening theory, I would call it. And this is a pretty strong argument for that we've already hit the bottom. This was longer. This went on from December 2013. You didn't hit the bottom until January. And then this one went from here. You hit the bottom, about a month earlier, December. And you topped out a little bit later in December there. So you hit the bottom quicker, shorter bear market. And even a little bit shorter here, I would say it's already extended there, but that's kind of like it's a little bit shorter, kind of the same as, I'd have to really actually map. Let's just see here on the monthly, forget off the top of my head. So that would be the bottom there. There's 12 bars, 12 months. And this one was 12 bar. Okay, so kind of the same, I would consider it the same. And then from here to here, this was 13. So kind of the same there. It's the 4-year cycle theory. You repeat the same general pattern and then you come higher. The difference now is it's kind of happened a lot of times. So maybe since everybody's kind of expecting it, it could be different. That's the main bear case on that. But the bull case is strong here. I'll give you that. The bull case is pretty strong here. And Powell sounding less hawkish. He sounded basically saying that they've combated inflation, all of this. We all know the truth. Those numbers are kind of made up or manipulated, I think, and most people think. And you don't have to probably be too much of a genius to look at actual prices of things and realize that we still have inflation. There's still an issue with that. But the way he sounded is like they're going to start to pivot in a few months, maybe just a couple more 25-point hikes, and then this thing comes around. We kind of just live in a society with higher inflation, and it benefits the people that own Bitcoin, that own these assets, but it kind of screws over the people that own dollars and all that. And that's the main case for Bitcoin. So there's a decent argument for it. We'll talk about more the other way when we get to the bear case. So yeah, and then more big banks adopting crypto, Fidelity, all of that. A lot of them are adopting crypto. The artificial intelligence little bull run with those altcoins, a lot like anything, a lot of them are scams, a lot of them are Ponzi's when it first comes out, and there are some other good fundamentals, decent adoption. There's always good fundamentals and good innovation like the dot-com era. That doesn't necessarily mean the market's going to go up because there's a lot of other factors. So that's a big thing there. Now, let's get to some of the bear points here. Similarities to the NASDAQ after the dot-com bubble. So after the dot-com bubble, the monthly green dot wasn't the bottom. And let me show you the comparison right now. So, the NASDAQ after the dot-com bubble on the monthly, I got it right here. You had this low, and then you had this low. Take a mental note of that. And then you had this green dot, and then you rolled over. It didn't really amount to too much. It came up a bit, and then you rolled over. Look at where we are right now with Bitcoin. This low, monthly green dot came up a bit more. This would be the case for one more kind of green month. So I would give February to be a green month. But the thing is, it would probably be lower than this one kind of. So we'd close the month, a little bit lower if it's like that. History never repeats exactly. So that would be kind of crazy if it repeats, so quickly, so similarly to that and comes down a lot here. That would be the case to, come down another about 50% from, our high here. So 50% correction from 25K. And that's going to be around 12K, which is big area, 500 weekly moving average. And I want to look at, I'm curious about the NASDAQ after the dot-com bubble, the 500 weekly. I mean, if you guys are not familiar, Bitcoin's always bottomed out at a major weekly moving average, usually the 200. The pandemic was the 300. I want to see what was, where we were here. Okay, so we were well below the 200. Curious about the 500. Wow. Okay, oh no, it was even below that. I thought that was the bottom for a second. No, even below that. Do we have enough data to go more? I don't know, 700 or something? So this is kind of, wow. That would be, we don't even have enough data. Like Bitcoin hasn't even been around long enough to compare to this. I don't know, 1,000. That didn't even start there, but maybe, I don't know, the 800, the 900. Did I already do the 800? 800 was close. 800 was close. So yeah, I mean, it did kind of bounce off of there. It was only under there for, a few weeks. So that's interesting though, 800 weekly. And then, yeah, the Great Recession was even lower. So that is very interesting. It's down to 5,000 now. I don't think, hopefully it won't go that low. But yeah, that's the main thing I'm looking at here. I mean, it took, on the weekly too, it took 4 yellow X's to hit the bottom here. What do we have on the weekly so far for Bitcoin? 2 yellow X's. And the way this worked is you had the 2 yellow X's and then you had to jump up and then 2 more. So 2 yellow, and it is different in some ways. It's never going to be exactly 2 more yellow X's on the way down to 12K or something. That would be my main guess, mid to late this year if that bear case plays out to the 12K. Some people have talked about, lower 10K. The lowest I could kind of see us going is probably 9K. There's some decent area. There's a big high volume area around like 9,300 or something. That's kind of the lowest I could see us going. I think if you're bouncing around under 10K for close on weekly candles under 10K, that's kind of dead asset area. That's my main thing. I would think one other crypto would probably take over, and Bitcoin would just probably bounce around these sideways areas forever and never really trend up with time anymore, probably. But I don't think that's going to happen. We'll talk about that if it does happen. The other thing too, the other comparison to the NASDAQ here is look at how these bright, these EMA ribbons are in the most gray they have been in right now. A few are in the gray. And if you compare this to the NASDAQ after the dot-com bubble here, we came into the gray, fully into the gray for the first time there. And you had to get deep in the gray, and it was the next green dot in the monthly that gave us what we needed. A red dot on the monthly, if you roll over red dot on the monthly, come into the red here, that's going to be a big buying opportunity, I kind of think, for Bitcoin if it does happen. So yeah. And if we move on to some other things, potential recession, it looks very likely, that we're going to enter a recession based on the numbers. Unemployment usually doesn't stay this low for this long. It's been a while since there's been a recession. It's been a while since we've seen, a big, 50% or 40% correction for the S&P 500. Unemployment keeps rising. It seems like more and more layoffs. Consumer debt is very high. A lot of people are defaulting on car loans. Credit card debt is very high. That's another thing there. And it's kind of like my thought on this too. I was thinking about this. We have like Amazon. There's so much instant gratification. It feels like it's hard for people to be responsible. You know what I mean? It really does. And I feel like that's going to come back and really hit us hard. S&P 500 and NASDAQ do look generally pretty bearish. The thing that I want to show you guys here that's important to look at, we'll just look at the NASDAQ. And, the main case to be made here that I think, we are in that going into that recession where we make these big drops down like 45, 50% for this, I would say, you're turning all gray in the EMAs here on the weekly. Usually you're not done until you come back into the brights. And usually it's pretty quick, other than a recession. I think if we were going to come back into the brights, it would have already happened. I think, except right here, you know what I mean? Curved over right there. But the thing is too, actually, I wanted to show you, it's probably better to look at the 10-day for this. Yeah. The 10-day is a better indication for the S&P 500 and the NASDAQ. Going into the grays, last time was recession right there. Last time was dot-com bubble. So that's a big point, and I don't think you're out of the woods really until they turn all bright again. Until they turn all bright again. If you look at the weekly is not even really close to turning bright. Maybe one of them, yeah, top one a little bit. That doesn't mean anything to me. If these all turn bright, then that's more of a case to be made that you would come up. But until then, it looks like we're more in that bear market. Excuse me. We're more in that recession. We're going to enter, kind of that deep recession, similar to over here, similar to over here. So, I'm not saying you're going to come down that much, dot-com bubble all over again, but, a 50% correction from the top, it looks very logical, 50 to 60%, something like that. The way I would kind of map it out is, you're kind of repeating, where is it on the 2-day, this general pattern, the blue triangle, red dot down, blue triangle, green dot, red dot, blue triangle, green dot, red dot, you could easily, it seems like you're going to easily repeat something of this nature into the next, couple months here, into May, maybe April, and then that's a test of, 10,000, I think. I think that's ultimately what's going to happen, and this is just more of a gradual decline. And if Powell just keeps pressing the 25 basis points button every single month, that would be the recipe to just gradually keep coming down, taking time for the markets to really feel those rate hikes. So that's kind of my main opinion there on that. And ultimately, unless Bitcoin kind of acts like gold, it's probably going to follow the NASDAQ coming down. So yeah, let's look back at our next thing here. So foreign issues, obviously Russia, that's a fundamental thing. Maybe some fear with that could happen. I don't know what's going to happen with that. I think it may go on like this for a while, but it ultimately isn't good. It ultimately isn't good. A lot of international tension, things with China too, with the spy balloons. These things aren't good. That's what I will say. They're not good. And high upcoming CPI reports. We don't know how it's going to be. If inflation still seems, it's hard to say. I mean, those numbers are kind of manipulated. It seems like, we get more high, the last report came in hotter than expected. If that keeps happening, I feel like Powell's going to try to sound more hawkish, and that's going to bring it down more. So yeah. And then upcoming regulation, that's another fundamental thing that's probably going to bring, I don't know about Bitcoin, but probably a lot of the altcoins and stable coins down. You look at Kraken, they gave in to the SEC. A lot of these companies, I think a lot of these companies didn't really expect us to go under 20K. And they weren't really that prepared for it because that was kind of going below the previous bull market high. Never happened before. So they had to lay off a lot of people, and then when the SEC comes to them, they're willing to give in because they want to stay in business, and they don't really have too much of a choice. So unfortunately, that's kind of what happens. Stable coins regulation, we're going to see that. We're going to see that regulation probably mid to late this year. And I think there's going to be a lot of changes happening. And I think ultimately that could bring a big scare and bring a lot of things down and bring Bitcoin dominance upward, which the charts would really support Bitcoin dominance coming up here. It'd really support Bitcoin dominance coming up here, especially this monthly. I mean, look at this. It doesn't get, you know, bullish div, money flow coming up. It doesn't get much better than this. You bring this up, you know, into towards the end of the year, 55%, you know, probably at least 50%, I think. That's going to be the place to probably get into altcoins, and probably by then you'll see regulation, and there may be there'll probably still be a lot of fear with altcoins because of the regulation, but that's where, not financial advice, but you probably want to get in when that happens. You probably want to get into altcoins, and that's going to be, you know, a big investment opportunity for the next bull run to get, you know, big gains, 10x, 20x, 50x with some of them, you know, you name it. You know, we've seen some altcoins really outperform Bitcoin now, but a lot haven't. You know, it's kind of hard to cherry pick the right ones unless you really follow fundamentals. You know, we saw some of them do well, but a lot of them haven't. A lot of them keep bleeding against Bitcoin. I mean, if we just look at something like Cardano Bitcoin, you know, just keeps bleeding. You know, just keeps bleeding. Not too much notable against Bitcoin. Just keeps generally going down. Some of them outperform it, but a lot of them don't. So yeah. So that's what we're looking at right there. I believe that was all of the, you know, things I'm looking at. Overall, I would side more with the bear points. The other thing to note that I've mentioned quite a few times now is if we can break above the 200 weekly moving average, this huge point right here at about 20, it's up to 25 even right now. Yeah, up to 25 even. We could hold, or 24.9 about, you know, 25 approximately. If we could break above that, close a weekly candle above that, you know, we just closed one right now, or is it at midnight? I forget exactly when it's supposed to close, but you know, if we could close one above that, that's going to be really bullish. Also, if these, like I mentioned, like the S&P 500, these weekly EMAs, if they could turn bright, let me show you. If they could turn bright, then this area right here, 15K, was probably the bottom. If they can't though, and we just roll over, then you're probably headed to lower lows by the end of the year, or maybe even into early next year, probably the latest. You know, every time when these is the end, signals the end of the end of the bear market into a great accumulation phase. Bright's right here. You're not catching the bottom with this, but it's not a bad place to get in, obviously. Same back here. This was, let me just look at the big chart to really, you know, see right here, they all turned bright. Amazing accumulation place. You would have just been, you know, going up and up and up and up and up, you know, just straight up there. So that's the big thing we're looking for. But until then, I still think that this point was not the bottom. I still think we could come lower and, you know, do what I think, you know, get 2-3 more yellow X's kind of on the way down to 12K or something towards the end of the year. Still think that's the most likely scenario right now. So that's the main thing I want to talk about. Other thing for more short term that I just want to tell you guys about, I'm going to go through this kind of briefly, you know, just the analysis right here. I want to look at the 20 hour and look at that money flow, you know, coming out. You know, we have a pretty big, you know, bearish div right here, pretty huge bearish div right there, all the way from here to this point, hitting off double spiral line and your 200 weekly moving average. This could well be the top. You know, this could very well be the top right here. And, you know, you're seeing the same thing on a lot of these time frames. Money flow coming out. This does not look good by any means, in my opinion. So I think there's a high likelihood it could absolutely come lower here. The other thing too is I think we may see the 3 week for the first time ever. It's eventually going to happen. You know, it hasn't happened ever to come into the red. The 3 week to finally come into the red. I believe even on the big chart, this hasn't happened. Let me just double check. Like 99%, yeah. It's never happened. You know, it's going on over, you know, well, since we started recording this, you know, almost 10 years. It's eventually going to happen. And when it does, that's when it's going to be a pretty good opportunity to get in, I think. You know, you get into the red there, get a green dot, probably come in, you know, cross over, get a green dot, probably the next green dot. Whenever that happens, that's probably going to be your general bottom in the really, really good buying opportunity. So that's, you know, kind of the main thing I want to say right now. I am swing short. Here's the short, little freebie right here. If you guys want to make a trade, if you're an experienced trader, you know, not financial advice, Trading is obviously very risky, but you could check out my link to MEXC or BITGET or BITGET down below. MEXC has zero maker fees, which is really good. It's a really good up and coming exchange. I really like it, so I've been using that one the most lately. But I use the other ones too. You never want, especially in this environment, don't leave all your money, don't leave all your eggs in one basket. USDT is risky too, so I would not be putting any money I couldn't afford to lose on these exchanges. But there can be money. There is money to be made if you know what you're doing. So be very careful, but check it out if you're interested. BitGet, if you're really new, BitGet they give you free like fake money to play around with, get used to the platform, so check them out if you're interested. Good promo for them as well, but I think MEXC is the best promo right now. You can get up to $9,000, you probably have to deposit a lot for that, but check it out, link in the description below. So this trade is doing pretty good, up $300 right now. All right guys, if you enjoyed the video, please leave a like, please subscribe to the channel if you are new, and check out my links below. Have a good one, goodbye.